Hey guys, good afternoon. So we got our 25 basis point cut and a bunch of word salad from Mr. Powell. So what will the market want to do from here is the $64 million question. At the moment, the market is below the monthly mean, holding that short volatility. 1661 is the mean, and that's right where the dealers come in to keep the volatility short. So as long as we're below that, we're going to stay low float, maybe into the end of the month. But there's next week that I was mentioning to you that the volatility picture looks a little bit larger, more volatility. So we could be bouncing at this point, going higher. We could actually, the daily three held the range at the prior close, and they pushed it back inside the distribution. Their risk was sitting here on the daily three. So what we have today is this break. They're sitting on it. They want to break it. This market wants to sell off. So they're going to, sorry, they're not going to break it. It'll probably bounce tomorrow. That's what I'm thinking. This will be broken. Come back down. So this might be the high here, 66.85.50. Our um, options today played perfectly. Um, it got a little wild as the market broke these levels, especially these twos, propelled it down to the downside, but they brought it right back inside of the mean. This is the December contract. The September 66.10, 66.08, 66.28, but you notice that the Jats levels are the same from December to December. And that is exactly what you want to see. The distribution doesn't shift, just the price levels on the panel. You see how that works? It's the same on the contract, like if you're looking at soybeans, 2 or 3 months down the road from the current contract. The distribution likely will stay the same um, for the current month to that future month. So that's how you know that your distributions are working correctly. So lining up. The only thing that changes is the price panel on the right side. The overall distribution is the same. I guess you can understand that. So, monthly, still holding that monthly one that we talked about this morning. And that's the critical component to this. Will we be moving risk out? Now, in the SPX, you've got the 6605 to the downside that is your support. So no doubt they're going to want to come in and test that. That is their call wall, JP Morgan's call wall for the JATQX. And anytime that you're on the other side of that call wall, the dealer hedged, and they hedge up to these monthly ones. See how that works? Quarterly two, monthly one. So we're in between our high and low. The zipper may be going into the month end if it doesn't break it and come all the way down. But I could see us staying in the zipper. So that's it for me today. Just a range trading. The options levels, as I was mentioning, indicated that we were going to have a range trade day, and that's what happened. It got a little bit more protruded, but it popped right back into where we thought it would be. Okay, so everything is working. All the cylinders are firing off. I'm looking forward to my collaboration again. We'll be getting Dr. McGraw back of the program, and then talk more about his option levels. He's got all the moves for the wings and how exposure with options that he can talk to us about and introduce us more into the concepts for the S&P 500. There are strategies specifically for that. You see, we stayed inside the one delta neutral, and that's something that he's talked about is the dealers want to stay delta neutral for the zero DTE. So if you know where that is, then you can shoot to be inside that range. Shoot for that trajectory so that the dealer wants to get paid. That's where the payday is. Know where the box is. So I'll talk with him more about that. And that's it for tonight. If you have any questions, let me know. Thank you so much. And we will see you tomorrow. Have a good evening.